Ben, the latest report here, which you're breaking here with us, is pretty interesting. You put a short on a company called Forescout Technologies, FSCT, that's actually in the middle of a $2 billion acquisition deal where they're getting acquired. The company does security control tech IT. Seems like a stock that would be in focus right now as so many are working from home. Tell me why you're shorting it.
Well, Oliver, thanks again for having me. This one's a very simple, good risk-reward short for us. Advent Technology raised a $2 billion tech fund late last year. One of their first tech moves was to acquire a company called Forescout for about $1.8 billion. The deal was announced February 6th, right before the pandemic spread across the globe. We have some issues with the transaction. Number one, we think that Advent's overpaying for the business. After reviewing the proxy statement, it's very evident to us that there were multiple financial projections made available. And in particular, there was an illustrative guidance that it's not very clear to us that management made that guidance available to all investors. They were planning to put that guidance out on the earnings call, and investors would have been blindsided with a substantial revenue revision. And they suspended that guidance in lieu of announcing a transaction with Advent. Now, bear in mind, this is all pre the pandemic spreading to the US. One of our concerns with Forescout is that they have a majority or a concentration of revenue with the US. They have concentration of revenues in their growth plan with small and medium-sized businesses. Our channel checks suggest to us that cybersecurity deals are definitely being pushed out. Prices are under pressure. So we think that Advent has a fiduciary duty here to reevaluate this transaction. They raised public pension money from employees, hardworking employees, Los Angeles, West Virginia, and that money is being transferred, to Advent management, who's walking away with $100 million. It's being transferred to index funds, to some activists that push the company for a sale. And we just don't think that's right. We think that Advent has a duty here to reevaluate this transaction. And based upon some of our numbers, which we'll make public on Twitter later, we think that they could argue directly to Forescout for a 35 or 50% price reduction. So we don't think this is a done deal. Shareholders, voted yes on the deal. Obviously, they want that $33 share, but we think there's still financing risk here. They have to raise $400 million of debt capital. Let's not forget that Forescout has negative EBITDA. They have no profitability. So the revenue growth rate is potentially negative. And so there's still risk that this transaction does not close. And we think there's a risk that the price gets renegotiated or Advent walks away.
So, Ben, when a company is getting acquired, obviously there's a lot of documentation, there's a lot of process. What makes you think you have particular insight into the documentation or the fundamentals of the company beyond what the acquirer does? Wouldn't that imply that the company Forescout is withholding information in some fashion?
Well, look, I think there's no mystery here that public companies of all stripes and shades are pulling guidance. FireEye yesterday, another company in the cybersecurity space, they pulled their guidance. There are other companies in the cybersecurity space we think that will pull guidance. Forescout is not immune. We believe that they serve, again, 4,000 customers. We believe that they're part of their growth plan, and their current customer base are small and medium-sized businesses. We've already done some channel checks with people in the industry. Deals are being delayed. Pricing pressure will become evident. So, there's no question in our mind that a company like Forescout is not immune to what's going on. And there's ample evidence that their growth rate was slowing well in advance of this deal being announced. Again, I urge investors to look at the proxy statement, read what the illustrative guidance is, and there is no mention that this illustrative guidance was shared with prospective buyers. And these revenue numbers were going to come in 8% below street estimates. Now, take a step back, look at Q3 19. The last time Forescout disappointed the street, the stock got battered down 37%. So had Forescout come out with their new guidance in February, the stock could have been battered, even more. So we think investors really need to pay attention to this and see that there's risk here in this transaction that's not, there's a greater than 2% probability that something happens here and there's a revision to this deal.
All right, so obviously you're short the shares. We reached out to the company, haven't heard anything back yet from Forescout. Ben, just last point, to be clear here, are you saying that the company basically kind of got away without having to revise guidance in accordance with what's happening in the economy right now, that they were acquired on a growth rate that is not going to hold up?
I think that's a strong possibility. Again, you have to read the proxy statement, and it's very clear that management was going to give this illustrative guidance on February 6th, the same day that they got acquired. And if you read the press release on February 6th, they withheld a conference call and they didn't issue guidance. And again, February 6th was well in advance of COVID spreading to the US, of the WHO declaring COVID a pandemic. So it's likely to us that even this weak illustrative guidance had substantial downside from there. And so if you're Advent sitting here, again, a steward of public capital, a fiduciary duty to your investors to get the best possible price at the lowest risk, I think you have to be thinking, how do we not lower the share price here to better reflect the new reality? We are seeing deals being busted right now. That's what happens in times of crisis. Now, we don't necessarily think that they can pull a material adverse event clause here, but if there is evidence that Forescout management knew the business was slowing faster than they let on, then I think Advent's in a very strong position here to go to Forescout and renegotiate a better deal lower. And that's where we stand. We think that there's a decent chance of this, and that's why we're short. And if we're wrong, we'll lose 2%, and life moves on. But if we're right, we see more than 25% downside potentially, up to 50% downside risk